The Morgan Report with David Morgan.
David Morgan, themorganreport.com, 8 January 2021. Well, what a week, but I'm going to stay away from the political stream this time and talk about something more in my domain, which of course is primarily precious metals and resource investing. This was issued on January 6th, a date that I think will burn in infamy as we move forward in history. It's from Monetary Metals, and this was Monetary Metals issues the first gold bond since 1933. Out of Scottsdale, Arizona, on Wednesday, Monetary Metals is pleased to announce the issuance of a bond paying principal and interest in gold. The term is 1 year, and the interest rate is the interest rate on invested gold is 13%, according to company CEO Keith Weiner, Ph.D. The proceeds fund a loan to Western Australia gold mining company Shine Resources, enabling the firm to put its Chameleon project into production. Monetary Metals has performed extensive due diligence on both the Shine Resources and the other project. Why gold bonds now? Before 1933, bonds were payable in gold. In those days, gold financed productive enterprise. However, since then, gold has been regulated. Before 1933, bonds were payable in gold. In those days, gold financed productive enterprise. However, since then, it's been gathering dust in a vault. Investors cannot earn return on gold and instead had to pay to store it. For returns, investors had to hold dollars, which had been subject to debasement by the Federal Reserve System, and I would add other central banks. Today, the 10-year Treasury pays less than 1%, although that actually went up, I think, on Wednesday to about 1%. It's climbing somewhat. Smart investors are seeking alternative options. Monetary Metal is on a mission to give everyone the opportunity to earn interest on their gold, said Weiner. The return of the gold bond market gives people an alternative to zero interest rate policy and currency debasement, he added. Monetary Metals gold financing is providing access to development capital required to unlock the value within our project while minimizing traditional finance complexity and lowering gold price risk for us, said Neil Rose, director of Shine Resources. So there you have it, folks. Very interesting commentary. It's not happened since 1933. A gold bond payable in gold. 1 year, it looks like, at 13%. My perspective is interesting, very interesting. It always starts with a 1, so I would anticipate that Monetary Metals and maybe others will follow suit with further gold-backed bonds being issued. Moving out into a broader perspective, this is from Reuters, and of course, everybody's favorite Goldman. Goldman proclaims the dawn of a new commodity supercycle. While last year's strong rebound in many commodity prices might be viewed as a V-shaped recovery, the bank contends it's just the beginning of a much stronger bull market for commodities. Looking at the 2020s, we believe that similar structural forces to those which drove commodities in the 2000s could be at play, Goldman argues. The 2000s were transformative for metals prices, which experienced a tectonic demand boost from industrialization, urbanization, and emerging nations, China in particular. Copper, the bellwether of the industrial metal sector, rose from under $2,000 per ton in 2000 to a record high of $10,190 in February 2011. But the supercycle hype dissipated over the course of a 4-year bear market, which only troughed late in 2015, leaving many investors disillusioned with the sector. So what's a supercycle? Why was the last one so short-lived? And what makes one of the Wall Street's finest think there's another one coming? Super boom and bust. A supercycle can be defined as decades-long, above-trend movements in a wide range of base material prices, deriving from structural change in demand. The industrialization of the United States in the late 19th century, post-war reconstruction in Europe, and Japan in the 1950s are two prime examples. The 2000 supercycle initially conformed to the same pattern, this time in the BRICS countries, Brazil, Russia, India, and China. Need I go on? A new boom. They're talking about that. Didn't we see it coming? The other core plank of Goldman's supercycle thesis is the lack of supply ready to meet any structural shift in demand. Capital expenditure in the commodity complex was already low before COVID-19. It has plummeted further in recent months as producers prioritize maintaining existing operations. China, meanwhile, has been soaking up the rest of the world's surplus stocks of metals such as copper, aluminum, and iron ore. Goldman is particularly bullish on copper with a 12-month target of 9,500 per ton, even after its turbocharged rally from the March 2020 lows of 43.71 to a current 79.35. But copper is only part of a broader call for a 30% return on commodities this year. Goldman views are by no means consensus. Many metals analysts were looking for price weakness this year as Chinese growth moderates after a stellar CV-19 recovery in 2020 and the rest of the world struggles to catch up. We're not sure, but one thing is for sure, thanks to Goldman Sachs, the commodity supercycle is very much back in the news. I want to take the rest of the time on this perspective to look a little deeper into it, and this could take a long time. I'm not going to take a long time. I'm going to be very brief and look at this one article from ZDNet, but this is about the SolarWinds breach, and just point out a few things on this article, and you can do some deeper dives. But first of all, this one here, SolarWinds, the more we look, the worse it, SolarWinds, the more we learn, the worse it looks. Attackers continue to exploit product security weakness. CISA, U.S. government agencies must update right away. Hackers accessed Microsoft source code. Oh, this on and on it goes. I mean, this is pretty serious. And my perspective is this isn't going to be immediate. It's not going to be like next week. Oh my goodness, look at what happens in one of the Fortune 500 companies, what happens at a major bank, what happens at the Pentagon, what happens at the DOD. I think it's going to be very subtle. I think that something that does happen may be kept on the down low and not reported. But I think that now that these back doors have been unlocked in some of the most important corporations on the planet, not all of them, a fairly small percentage, but it doesn't take a whole lot because everything is interconnected, as we all know, and you can pass this, I'll call it quote unquote virus, computer virus, between different entities, different corporations, etc. Yes, there's firewalls and ways to prevent that. I'm well aware of it. But if you don't know it's there, you've got another thing coming. So just a couple more here. Even a security mature software supplier could have missed this. SolarWinds' degree of transparency with its customer list might need to change. SolarWinds was large and prominent enough that it was an attractive target for the attackers without mentioning customers' names, but the customer page on its website went as far as listing all 5 branches of the U.S. military, all 10 large U.S. telecoms, and the top 5 accounting firms as clients. That doesn't mean any of those organizations are caught in the breach, but it does mean attackers have some idea of the values of SolarWinds as a target if they are successful. I think has been determined they have become successful. At what degree, we don't know yet. I'm not sure we'll ever know. Third-party risk management, legal, and procurement will likely force CISOs to reevaluate if they want to be listed in the future. And according to CNET, the SolarWinds hack is officially blamed on Russia. What you need to know, you can read this article during the weekend. It's not much of a read as far as taking much time. I would say, I don't know. I mean, that's the fact. Could be Russia. They're pretty well known as being great hackers. Is China involved? I don't know. What we do know is that this breach could, again, repeating, be something much more serious down the road than we think. It might be at first glance. Again, this is kind of repeating what I said according to reports from Reuters, the Washington Post, Wall Street Journal. The malware affected U.S. Departments of Homeland Security, State Commerce, and the Treasury, as well as National Institutes of Health, the National Institutes of Health. So it's a big deal. I'm going to leave it there. I will sign out for this week. And I wish you all the best under these very difficult and trying testing circumstances that we are all in. And remember, there is nothing more powerful than the truth, and we certainly could use a lot of it at this point in time. And we're just getting kind of a blur over the truth in a lot of circumstances, politically, economically, socially, you name it, censored or non-censored. The basic right to speak out freely and listen to both sides looks like it's something in the past at this point in time. Never fear, the truth wins out in the end. At least I believe that still. I'll be back with you next week.